So here with more on a strategy and how to position for the year end is Paul Hickey, co-founder of Bespoke Investment Group. She tried to say, Paul, it's great to have you here.
Good to be here.
You know, Mike Santoli was saying this is what it looks like when things expand, when it's not all tech. What do you make of yesterday's action and then the follow through or not today?
So, I mean, I think the way you got to look at it is, as it became clear that the government was going to shut down in mid-September, you started to see a real widening in the spread between the cap-weighted index of the S&P 500 and equal weight. And basically what that's telling you is that the mega-cap tech stocks were driving the gains. As investors in the market, we're looking at those to be more insulated from the overall effects of the shutdown. Federal government is a big part of the economy. When people who work for the government stop getting paid, that's going to cause ripple effects in the rest of the economy, especially consumer-facing stocks. Then once we got to Election Day, it was pretty clear that people thought once the election got passed, that was going to be the catalyst to get the government reopened. We started to see that spread narrow. And the result is that these mega-cap stocks, which got all the inflows through the month of October, through the second half of September into October, started to see those outflows. And you started to see a big impact on the market because they have such a high weight. But now we've seen the spread start to narrow. So the smaller stocks in the index have held up. Breadth was better yesterday on the worst day in over a month than it was on the Monday and Tuesday and Wednesday of the week before when the S&P was actually up.
So why then did we see sort of the air go out of some of these big cap tech names? It's not because a fundamental reason of losing belief in the future, right? It's just...
Yeah, no, I think you just got to take a step back and have these things gone too far too fast. You know, I always tell my kids, if you're going to go out drinking, have a glass of water before each drink. And, you know, a night at the Brick Street, you know, when you're with no, when
at
you
Miami
don't pace
University,
yourself,
great college.
That's going to cause problems. OK, so I think in this case, I think it's perfectly healthy for investors to be questioning what's going on. And have we gone too far, too fast? Because we can't keep going up in a straight line. And if we do, the hangover effect, to keep the analogy going, is just going to be worse.
And so that's why you're not really interested in buying tech even at sale prices.
I think some of these mega cap tech stocks, you want to just, I mean, again, let's put this in perspective here, what they've done over the last, several weeks here, and it's been a couple of days sell-off. So I think in that respect, I think you want to let things settle out here and look for a broadening of the rally. These companies that were more tied to the consumer that underperformed during October. Now you're seeing these federal workers getting paid, and there's almost a boomerang effect. And I think those stocks will see better returns as we go into year end.
Just in time for the Black Friday weekend, too,
exactly.
which is just
double
around the corner.
Paychecks.
Yeah, it is very interesting. So what names might you be looking to buy here?
So facing the consumer, I mean, one stock, Starbucks, is I think that's the turnaround situation there is starting to take effect. We're seeing small, it seems like small steps, but it's increasing efficiency at the company to streamline the operations. The company has a pretty good dividend, and while it trades at about 30 times earnings, the thing to remember is that's trough earnings. So as we see earnings start to improve, that valuation will start to look better.
When I think about consumer behavior, I think about a Starbucks as sort of like a little luxury. So even when, other things you might be giving up, it's like the lipstick effect. Like, it's just a fancy coffee makes me feel better.
But yeah, it may make you feel better, but during that time when you aren't getting a paycheck, it's an easy thing to just cut out. And then now that things have opened up and we're back to a more normal, any short-term hiccup there, I think, is going to be reversed. And then again, like you said, it's the little things going on when now there is more certainty, you're not going to forego that. And I think consumers are starting to come back. The sentiment towards the company is improving.
Financials have actually had some nice pickup recently, and there's one in particular you like.
Yeah, so I think Bank of America is a stock we like here. It's just within, in this most recent rally, it just got up near its 2007 highs. And I think once you get through that level, it's going to be, that's a psychological barrier for the stock. It trades cheaper than all its peers, and rightly so. But I think you're going to start to see, they just had their investor day last week, and I think you're going to start to see the company make moves here and improve and improve their fundamentals. They have more tied to the consumer and the health of the U.S. economy.